Hey, what's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel, where we teach you how to become a more profitable investor in the stock market. That's what we're all about. Today we're going to be talking about how to invest in bonds in the Robinhood brokerage. This is a commonly requested question, so I'm going to take this video to discuss this, how you can invest in bonds with using Robinhood. So yeah, let's get to the video. If you are new here to the Flaming Profits YouTube channel, what are you waiting for? Make sure you subscribe, that way you do not miss out any helpful videos that will make you a lot of money in the stock market. Make sure you like this video as well. It really helps me out and it lets this video get to more people just like you. So yeah, make sure you like this video, subscribe, leave me a comment down below if you have any questions or want to share your opinion at the end of this video. I would really appreciate all three of those. Like this video, subscribe, and leave me a comment down below. Alright, before we get started, I do want to share some amazing referral links for free money, free stocks such as Webull. They'll give you 2 free stocks as soon as you sign up. You better not miss out on this opportunity. The link is in the description, and then for Robinhood, you'll get a free stock as well. And then for M1 Finance, free $10 for that you get started investing with them. I use this brokerage a lot. And then this Discover secured credit card, you get $50 as soon as you sign up, and 1 to 2% cash back on every single purchase. So a lot of great deals. Definitely take advantage of them now. Alright, so the difference between stocks and bonds is something that you have to understand. So stocks are classified as an equity instrument carrying ownership interest, while bonds are a debt instrument with a promise to pay back the money with interest. The return on stocks can be dividends or capital growth, while bonds is mainly an interest that you're getting as a return. There is no return guarantee with stocks, but bonds are for sure. So no matter what, it's a promise that they'll pay you back a certain amount of interest. So to make this a little bit more simple, stocks are more risky than bonds. Stocks, you probably know what they are. It's like an investment in a company. But bonds are basically a promise where they're going to pay you back a certain dividend or a certain amount of interest every single month, every single year, as long as you pay for the bond. So bonds are a lot safer and less volatile. I like how this graphic describes this. So bonds is basically an issue of debt that somebody owes you a certain amount of money. Debt that is made with an investor for cash in exchange for payouts of interest. Traditionally traded over the OTC, and then generally lower risk, lower reward. So you're not going to get compensated as much as you can with stocks, but you do have less risk. Since 1929, bonds have earned people around 6% every single year. And then stocks, it's an issue of a stake of ownership in a company. So by you owning a stock, you're actually part owner of a company. Stocks are a claim to the company's assets and earnings that often gives the investors voting rights and pays dividends. Typically trades through a central exchange like the New York Stock Exchange. Generally higher risk, higher reward, so basically the opposite of a bond. With stocks, you have a lot more risk, but there is potential for higher reward. And as you see here, since 1929, stocks have earned around 10% each year. So it is higher reward, but there is higher risk as well. So why would it be a good idea for you to invest in bonds? The reason is simple. It allows for your portfolio to be overall more balanced and safer. You're less likely to lose a lot on your portfolio if you have some sort of bond investment as well. So it's important for you to know your options. Don't just invest in stocks, because bonds will give you an opportunity for you to protect your assets a lot more than stocks. But definitely have more stocks in your portfolio than bonds. So depending on the type of bond, your return is going to be a lot higher or lower. So generally, the shorter the bond, the less return they're going to give you, and the longer the bond, the higher their return the bond will give you. So there can be different kinds, such as ultra short term, intermediate term, and long term. So basically the longer you're willing to keep the bond, the higher the return. That's how bonds work. So let me show you how you can actually invest in bonds using the Robinhood brokerage. A lot of people don't know this. That's why I wanted to make this video, so that you actually know that you can invest in bonds using Robinhood. So this is Robinhood, an amazing brokerage that I use every single day. So let's look at some bonds that are available on Robinhood. So all you have to do is search for bonds, and you'll get a lot of different options and different kinds of bonds as well. These are investment grade bonds. So as you see, they're a little bit less volatile. They mainly stay consistent around 115, 120, depending where the market goes, and this pays you a 3.25% dividend yield. So a lot of bonds are gonna have high dividends, or pretty much bigger dividends than a normal stock will have. That's because that's how they're gonna pay you their interest. And you can look at the max chart of any bond that you see on Robinhood, and this gives you like a long-term view of how the price fluctuates. So as you see, it normally does go up in value over time, but it's not dramatic. It's pretty much flatline, but there is a little bit of growth. And having a small percentage of your portfolio into this type of bonds will allow your portfolio to be consistent and have less downturns whenever the market goes south. So as you see, this one as well, Aggregate Bond Etf, it's kind of the same story here. And if we look at the max chart using Yahoo Finance, you'll see that it's pretty much flat over the years, but there is a trend to go up. So yeah, let's take a look. So yeah, as you see, the prices keep on going up, but it's less dramatic. It's very linear and grows over time. This is SPDR Bloomberg High Yield JNK. So as you see, the market went down, and this affected this ETF that tracks bonds, the bond market, but it's still not that drastic of a sell-off compared to like the S&P 500 or any other stock that you can look at. So let's take a look at the max chart on this one. So yeah, pretty flat. The only reason it went down is because of the recent downturn. And you can hand select the bond that you want, but just make sure it has an upward trend on the max chart. That's the most important thing. And try to make sure that it's been in the market for a long time. This is the Vanguard short-term bond ETF. So a little bit less higher return because it's short-term, but it's pretty consistent and will pretty much always tend to trend up. So let's take a look at this one. Alright, so here we go. VSV, short-term Vanguard bond. So yeah, pretty much always uptrending. Now let's look at this long-term bond ETF by Vanguard. Vanguard has one of the best ETFs, like for pretty much everything that you need. Vanguard has it, and they're a really good company that allows you to be able to invest in this type of instruments. So yeah, let's take a look at this one, long-term bond ETF. So here's the 5-day, 5 years, and max. So yeah, linear upward trend. That's what we like to see. So yeah, that's the difference between the stocks and bonds. It's always great to have both in your portfolio. Keeps your portfolio a lot more balanced and better able to perform through any circumstance in the market. So yeah, that's how you invest in bonds using Robinhood. Very easy and simple. Just do your research. Always invest in what you understand only. Yeah, so there we go, subscribers. Thank you all so much for joining me in today's video. I hope that I brought value to you and that you learned something new today. Make sure you like this video, subscribe, comment down below. Check out the links in the description for free stocks, free money. You definitely don't want to miss out on that opportunity. Thank you all so much, and I'll see y'all in the next one. Peace.